The January jobs report coming in red hot. The U.S. economy adding 353,000 jobs in the first month of the year, crushing the street's expectation for 185,000. Wage growth also beating expectations here. Here with more, we've got Yahoo Finance's Josh Schafer. Hey, Josh.
Hey, Brad. Yeah, so we're talking about obviously three pretty big beats there when you consider a lot of people have been expecting that unemployment rate to pick up for a while now, and it just really hasn't. We're sitting at a historically low level of 3.7%. Obviously a massive beat on job growth. But one thing I wanted to hone in on here, guys, is that wage growth number, because we know over the past 2 years now, that's been a big thing to talk about in terms of what it means for inflation. Obviously, Federal Reserve Chair Jay Powell speaking the other day and saying that essentially they're not looking for more softening in the labor market. They feel pretty confident. He also mentioned that they were no longer worried about a wage growth spiral. He directly addressed that. And now we have wages growing at their fastest level since July 2023. I don't know, it feels a little bit at opposition with what we heard the other day in some ways.
Yeah, I was going to say, and also now you have to bring up the fact that maybe this would reignite some of the fears that we could see a bit of a move up here in terms of that overall inflation story, the narrative, in terms of if this is a start of a larger trend. And like we just talked about with Jennifer Lee, you can't look at just one data point and put too much just your eggs in one basket here, but it does point to a potentially concerning trend here for the Fed. And then, of course, the question is how the Fed is going to potentially walk that fine line and balance what could be an upside here in inflationary pressures.
No, it definitely is something to consider. And I think there's the other camp that would come at you and say, well,
everything else points to the other.
Oh yeah, all we know is inflation isn't falling, and maybe we're not even in a soft landing, we're actually in a no landing scenario, right? When you take a look at how hot this job market is right now, like I think we need to start also really using that word, guys, hot. This is basically a hot job market again. We've been using the phrase slowing, we've been using the phrase cooling for a while now. Over 300,000 job ads in back-to-back months. You can't underscore how big that is and what 4.5% wage growth is doing for consumers. You take a look at, obviously it's very early in the first quarter, but even something like what the Atlanta Fed is tracking for growth in the first quarter right now came out at 4.2% yesterday. Like well above 2%. We're talking growth here. Yeah. And I think we're seeing that in the early January data, when people had started to, I think after that Fed meeting, say, are we going to slow down a little bit? Are we going to be too restrictive? Not really working thus far in that sense.
And then you also have to think about just the timing of any potential rate cut, how long that could potentially be punted for. I mean, you take that into consideration, or I guess weigh that against the odds on the street. The street is still very optimistic that we are going to get a rate cut, if not at the March meeting. Yes, those odds have come down, but they're still optimistic we're going to get it before the end of the first half of the year.
Well, because I think most people in their inflation forecast right now still see inflation coming down, right? Yeah. And I think back to the real Fed funds rate chart that we have in our chart book, the Yahoo Finance chart book online from Matt Lazzetti at Deutsche Bank. When you have inflation coming down, and the interest rate stays at the same level, you're naturally getting more restrictive. And that is what a lot of economists that are calling for cuts right now are thinking about. They're not thinking, because Jay Powell essentially told us on Wednesday, don't worry about the hot economy. We like the hot economy to some extent. Maybe he doesn't like it this hot, we're not sure. We'll find out as they speak over the next month. But he was telling us to really focus on inflation. And right now, what we know about inflation is it's coming down, so the Fed at some point would likely want to cut.
All right, we will see what the timing all shakes out and what it ends up looking like. Josh, great stuff. Thank you.